In William Galvin, he is Secretary of the Commonwealth of Massachusetts, calling for a 30-day cooling off period for some of these names. Secretary Galvin, so go into why you believe that we need to maybe just put a hold on GameStop and some others.
Well, first of all, it's a great risk to many of the unsophisticated investors who are investing in it, whatever their basis is. I've talked to some of these people. I think we've all recognized that the current pandemic has created a unique situation where many people have gotten into day trading who really have no idea exactly what they're doing. It's something that they're trying to figure their way as they go. These types of entities, such as GameStop, have created a really difficult situation for these people. They think they're missing out if they don't make a bet on them. They don't really understand what they're doing. I think small-time investors like that, unsophisticated investors, are going to be hurt by this. Moreover, I think it really is a risk to the broader market. The point that was just made about the structural issue, the systemic issue of the shorting that's going on when you have this excess interest in a stock beyond what the issue is, that has to be addressed. It has to be addressed immediately because that represents a risk to the overall market. Well, because it creates uncertainty in the marketplace. You know, the dot-com bubble of 1999, I was a regulator then also, came about because of a lot of uncertainty in the market.
And I interviewed you, Mr. Secretary,
well, that says a lot about both of us, I guess. But my point is
I don't know if it's good or not, but the point, go ahead.
It's a risk to the marketplace. The marketplace should be a place where risk is taken, but not reckless risk, and not a situation that undermines the entire system. And that's what we're looking at here. This is irrational. As was just noted, the moves in these stocks, both up and down, in GameStop, I'm speaking of specifically, is irrational. It makes absolutely no sense. It has no basis in reality. That is not what you want in a capital market.
No, and the reason that we mentioned 1999, and I'm not saying this is 1999 because we both remember there were companies that were trading at $20 billion market caps that had no value, were inventing all these metrics, all these new non-GAAP type earning measured by eyeballs. This is a little different. To Chamath's point and Scott's point in the interview before us, they talked about fundamental valuations. GameStop's fundamental prospects are not 1,700% better today than they were a couple of days ago. You've got names like, I don't even want to say them because they might move if I utter them, tiny microcap stocks of formerly bankrupt video stores, things like that. Why do they even have options on some of these stocks?
Well, they shouldn't. And that's why at this point, we have a new administration coming in, and hopefully the national regulator will take action. I believe they will. But in the short run, I think it's certainly within the power of the marketplace itself, in this case, to suspend it. They shouldn't be providing a forum for this type of activity because it's dangerous not only to the investors, but it's dangerous to the marketplace.
Well, but to be fair, these retail, and then by the way, let's be clear, not everybody on Reddit is a retail investor. I can guarantee you there are very wealthy hedge fund managers trolling around on there as well. There are people with, Bloomberg terminal screenshots. Bloomberg terminal is like $27,000 a year. So let's just be clear. There are sophisticated, wealthy investors also on some of these message boards. And what's interesting is that if that's the case, and if the retail investor wants to risk all their money and make it, good for them. Love it. Hedge fund loses their money, too bad. I agree with that. But let's say there's a hedge fund that is obeying the rules over here, but they've got employees who maybe are not obeying the rules over there under pseudonyms on message boards. What then? What exactly should regulators be doing?
Well, again, we're going to do the best we can. I mean, we understand there is inherent risk in the market, and no one's trying to make that go away. We want that. That's what makes it grow. On the other hand, when it becomes reckless, when it becomes fraud as opposed to froth, that's when I think things have to be dealt with. And I think in this case, there's a real risk to the marketplace, there's a risk to the economy. We recognize it's a very volatile time. We've been talking about it all year as we've been going through the pandemic. This is an example of that. And I think it has to be dealt with as best we can without doing great damage to the marketplace. Moreover, I think that there is not just a risk to these investors, but there's, as you point out, a lot of this is being fueled by social media. We didn't have that in 1999. But in many ways, it's analogous to what we've just gone through in the political context, where you had rumors and misstatements and deception going through the social media that had to be dealt with.
Shepard Smith here. Thanks for watching CNBC on YouTube.